Daniel Larimer is the founder and chief developer of BitShares, an open source software company based in Virginia. He's also the originator of the concept of decentralized autonomous companies, which has come up much today and yesterday. So he's a big thought leader. The company's flagship concept is BitUSD, I believe, a digital currency that solves some of the fundamental weaknesses inherent to Bitcoin, and he's got a whole bunch of other projects he's working on. So take us away, sir. Let's give him a big round of applause.
Everyone hear everything?
Yep.
All right. So today I want to talk about Bitcoin first, and everything that goes beyond Bitcoin, because Bitcoin is just the beginning of a much broader movement. When you think of Bitcoin, these are usually what you think of. Bitcoin money is a currency, government regulation, the Bitcoin blockchain, BTC. But I think that view is entirely too narrow because Bitcoin has risen so fast, so quickly, almost everyone is focused on what the share price is, what the coin price is, how much money am I going to make. And in the process, it's been easy to forget what Bitcoin is really all about. The big ideas about Bitcoin is that it's the first money that all it requires is the freedom of speech. We have the internet, we can broadcast transactions everywhere, and we can use freedom of speech to agree and come to a consensus on who owns what. It allows us to move value through time and space more efficiently than anything before it, with lower fees. It's free, or near free. It's free from regulation. Obviously, there's going to regulate the people who use it, but Bitcoin itself is free. It gives you privacy, transparency, accountability. These are the big ideas that Bitcoin stands for, and that I think is going to change every single business that we interact with, whether it's insurance, domain names, identity, voting, banking, stock markets. So Bitcoin is all of that. But all those things aren't about mining. Mining is perhaps the antithesis of what Bitcoin is actually about, because mining is slow. It's not economical. And ultimately, it's resulting in very decentralization and barriers to entry. That the original idea of Bitcoin, of everyone can mine, everyone can participate, no one's in control, that's been lost in the mix. I'd say that Bitcoin isn't even about cryptography, though cryptography certainly helps. Because in principle, if you could use the same process, the same consensus algorithm in a prison, as long as everyone could verify signatures. You can use it in a small town. Because it's about transparency of the ledger and unforgeability. And there's ways to implement it without cryptography, but of course in the digital age and the internet age, cryptography helps a lot. And this is going to be most controversial. I'm going to say Bitcoin isn't money, though we all wish it was. And why isn't it money? Because when you buy Bitcoin, you pay a spread. And when you use Bitcoin to buy something, you pay the spread again. And while you hold it, it's volatile. So everyone who's trying to use Bitcoin as a means of payment isn't actually using it for money. Merchants are accepting it, but cashing out immediately. And the spreads are entirely too wide and too volatile. So, Bitcoin is the idea and principle behind the Constitution that defines what these United States should be: the security of life, liberty, and property. It helps us secure our property rights, and with our property rights, we can have liberty. And it gives us a free economy, which helps us secure our life. But, like the Constitution and these United States have turned into the United States. And the intent of the founding of this country has sort of been lost. We are now a world empire that's economically extorting people all over the world. And if we're not careful, and we could lose sight of the founding principles behind Bitcoin as it grows and as more players enter the field, as it becomes centralized in miners, and therefore we get choke points and barriers to entry that ultimately are going to lead us with a same, maybe a different inside group of people that are keeping out everyone else. So Bitcoin is about being pioneers. We're settling a new frontier in the internet and the digital age where we can actually have freedom for property and using the ideas that Bitcoin has made possible. Bitcoin had mining, the idea being that it was distributed like gold, equal opportunity for everyone. But the laws of economics come to play, and the reality is that decentralized mining cannot be profitable. Economies of scale, benefits of centralization, cooling, capital accumulation, all those things mean that the person who can most profitably mine are going to be those who are most centralized, and everyone else who attempts to mine is not going to be able to earn a profit, which means they won't be able to do it unless they're contributing to charity. Last year in Vegas, there was a talk about the future of mining, where they highlighted how mining has become a couple mining pools and a few large ASIC manufacturers. And when there was a fork in Bitcoin, March 2013, these people got together and they voted on which blockchain, which fork to support. And that leaves me to the $500 million question. I wanted to ask this that day, but we ran out of time before I could get to the microphone and ask it. If we're going to trust these people to produce the blocks and to vote on which blockchain's the official blockchain, couldn't we do it much more efficiently if they just signed the blocks with a cryptographic elliptic curve signature instead of spending $500 million a year to produce a hash signature that can be forged by anyone who's willing to spend $501 million a year? And is the idea that mining allows anyone to enter really buying us anything? It's saying that what if these Bitcoin insiders are compromised? The government confiscates their mining equipment, or they give in to pressures to filter transactions, or whatever. Do we want to hope that someone's willing to invest millions of dollars to unseat them? So I'd like to introduce a new way that I understand Satoshi's Bitcoin, not from the perspective of a currency, but instead, Bitcoin is nothing more than the ledger of a virtual company that tracks who owns what stake in this company. And when you look at this, you can say, well, Bitcoin's got revenue from transaction fees. This revenue is then paid to miners to build in barrier proof of work that prevents it from being forged. But unfortunately, the revenue is insufficient, so the company has to raise capital by issuing new coins or shares. And it raises its capital, it pays the miners to produce work that's got no redeeming value after it's done. As a result, the shareholders are diluted, the coin holders, if you will, to the tune of $500 million a year. Bitcoin is a penny stock in the red with no end in sight. You're being diluted. If this was Apple, it'd be like Apple issuing new shares to buy heaters to fight global cooling. The shareholders would revolt because they're not actually getting any benefit to their share price as a result of all this work being done. So, what's happened in the cryptocurrency ecosystem in the past year It's the rise of proof of stake. The majority of the top cryptocurrencies these days are proof of stake. Proof of stake is nothing more than the concept of people getting together and voting on which ledger is the official ledger. And who better to do that than the coin holders themselves? Bitcoin miners are effectively doing voting with hash power. This is voting with your coins or your shares, whichever analogy you like to take. And as a result, every single block is approved by the users who are storing their wealth in the system. It is more expensive to attack a proof of stake system because you have to do a hostile takeover. You have to buy the majority of the stake. And in the event that one of these systems is compromised, you can fork the offending stake out and continue. Whereas if the mining power behind Bitcoin and Litecoin and Dogecoin are compromised, you can't vote them out. You have to change the protocol to a new proof of work. And guess what? It doesn't matter what your proof of work is, the laws of economics are always going to centralize it in the hands of a few. And eventually, these parties are going to have CPUs that are paired with RAM that can do any proof of work you throw at them. And that's a barrier to entry, and it prevents competition. Once you own that proof of work, you own all systems based on proof of work. Whereas with proof of stake, you have the free market. And the free market is the ultimate form of decentralization. So, we have a choice. All you who own tens of millions of Satoshis, if this was a company and you're all the shareholders, you're like, what are we going to do? We've got to pivot the business model, make it profitable. We've got to vote in new management. Or sell and go to competing alternatives that are more profitable. I'm not, this is a Bitcoin conference, and here I am telling you got to change something or sell. But it's a hard message. The free market is unyielding. Competition will come. And right now, Bitcoin's got at the time I put this together, it was a $5 million market cap. Now it's a $4 billion market cap. But that market cap is built on the backs of everyone who's building their businesses and providing the infrastructure. And that infrastructure, and as a result, you're supporting the share price, but you're not getting anything out of it other than the transaction fees or whatever side business model you can have profiting from Bitcoin. But the reality is all of your infrastructure can easily be ported to any other system in this space and support some other market cap. So Bitcoin's lead in its network effect and its market cap is vulnerable, especially when you look at the economics of it. I have talked to many people at this conference, many wealthy people that don't want to get into Bitcoin because they see this clearly. Some questions to consider is how can Bitcoin change? How can we save Bitcoin? How can we come to a consensus about proof of work? Who's going to lead? The Bitcoin developers have been unwilling to change hardly anything, unwilling to change proof of work to prevent ASICs. We need someone to lead and come to the consensus of how we can make Bitcoin profitable. And that is a problem that, because Bitcoin is so rigid, it's both its strength and its weakness. It can't adapt to changing market conditions. Its initial design of giving away free samples with mining, free samples have all been taken over by the miners, and now they're selling them back to people. So Bitcoin needs to pivot to remain relevant in the long run, to become the global currency that we all hope it would be, to realize the dream of what Satoshi had originally intended. I said this before, the free market is the ultimate form of decentralization, and reducing barriers to entry is the way that we maintain the maximum amount of decentralization. It increases competition to the maximum and makes sure that the most productive ideas can flourish. So, for the past year and a half or so, I've been working on BitShares, and the whole idea of BitShares is that things is the analogy of a company. I want to take Bitcoin, make it profitable, and to realize the vision and dream that Satoshi started out with, and that we all ultimately want, without being caught up or blinded by the fact that Bitcoin has risen in price so much. So we focus on revenue and making sure that every transaction in our system pays a transaction fee, and that those fees are more than enough to pay for the maintenance of a proof-of-stake network. So we've got an entirely different system here. There's dozens of proof-of-stake coins out there. All these coins, they're faster. In our case, we're able to do transactions in 5 seconds on average for confirmation. That's more secure than Bitcoin after 1 hour. They can be easier to use with what we're doing with BitShares. You never have to see a public key or an address. You have names registered in the blockchain, and you send money to a name. And it automatically implements the best privacy that Bitcoin has, the best practices, generating a new address each time you send to people. But perhaps the biggest innovation that we've had to help realize the idea of a global cryptocurrency rather than a digital penny stock is BitUSD. All the benefits of Bitcoin with the price stability of the dollar. What you're looking at here is a graph since we launched BitUSD about a month ago. And this shows the black line is the real price according to the exchanges, and the underlines the internal trading on our blockchain. And you can see that they are highly correlated at all times despite the relative volatility of BitShares X, which is what this is running on. So here we have a cryptocurrency that can do everything Satoshi wanted in 5 seconds, be more secure, actually earn a profit, is sustainable, economical. This is a cryptocurrency that the masses can understand. You can put your money in here and not have to worry about the price going up or down. And if you're a merchant, you can accept it without having to immediately cash out, which makes it a lot easier. All the payment companies out there are charging a spread, whether it's hidden or not. And that's just like the credit card spread that we're seeing today. Now merchants can accept a transaction for 5 cents, no spread, and price stability. But there's one more thing that BitUSD has that is going to change things, and that is yield. BitUSD is created by being lent into existence using a cryptocurrency, BitShares X, as the collateral. Those who borrow the USD to sell it and create it are paying interest to those who hold the BitUSD, and this interest is variable. It depends upon the expected growth in the underlying. So now, the people who are bullish cryptocurrency, understand this technology, can provide incentives for all the regular people who don't want to worry about the volatility or the risks. They take all the risks, they get the gains, and the average man gets a relatively high interest rate. Not funded from inflation, not funded with a Ponzi scheme, but funded from free market participants taking opposite sides of a trade. One gets leverage, the other gets price stability. It's all collateralized 3x. There is no counterparty. It's not an IOU. This is not Bitstamp USD trading on Ripple. This is not user-issued assets on Next, where the company that backs it can go out of business so the government can seize the funds like eGold or those before it. This is not a system where the supply of BitUSD only ever grows, and it depends upon a never-ending game of musical chairs of like other systems have been released. This is a system that works at any scale, small or large. It's possible for the supply of BitUSD to go back to zero when everyone unwinds their positions. And so it's a real game changer. It's got an internal market, and automatically will do margin calls whenever the collateral starts to be at risk of running out. So the system can handle all the volatility that Bitcoin has ever seen without having any event where the BitUSD is uncollateralized. So this is a game changer, because now the average man can just view the blockchain like a bank. They've got a currency they can transfer in 5 seconds to a name and never have to deal with an address. And any transaction fees or spreads that payment processors might have are more than made up for by the yield. And the risk of default of the systematic risk, is also made up for by the rate of return they're getting. So this is all in the spirit of realizing the dream of what Bitcoin could be and what it should be. And we can sit here and allow Bitcoin to continue as it has, as just a simple currency, if you want to call it that, with high volatility, or we can change and we can continue toward the vision of what Bitcoin could be. And I am hoping that Bitcoin changes, because Bitcoin is the leader, it's the flagship, it's the one that everyone knows. And it would be a shame to see the Bitcoin, the original one, fail because it was unable to adapt to a changing market. So each of us has to vote with our money, with our businesses, whether we're going to support the continued centralization of miners or we're going to demand change. And I encourage everyone to stick to the ideal of Bitcoin and take it to the moon. Thank you.
Looks like there were a lot of tweets during your talk. Do you guys have any comments or observations or questions or anything you want to add? Would you raise your hand? Almost? Fine. Yeah, very good.
My question is, if you have the USD in your system, how do you cash out? Because having US peg value in your system is all great, but if you can't put it in your bank, like you would say through BitShares, then what's it good for you really?
It's an asset that's got the value of a dollar. It's not a dollar, which means that at any time you can trade it on the market in any exchange for about a dollar. There are exchanges right now, Bitter, that trades USD versus BitUSD directly with a relatively narrow spread. It's still very young, but as the market matures, there are going to be more and more people that provide BitUSD, USD exchanges, and the spread will be proportional to the number of people that want in or out at any given point in time. So it works just like anything else, except instead of someone issuing an IOU and being a liability, it's an even trade, one asset for another asset. And internally, it maintains that value.
Anybody else? Questions? Just tell us where you're from.
Hi, my name is Michael. I'm from Los Angeles. I have a couple of questions about the security of this. If you're valuing it to the US dollar, that means somewhere, someplace, you need to be backing up the reserves of the US dollar somewhere. Because the value has to come from that. And I'm wondering how that's done and how you keep that from being centralized and confiscated like an eagle type of situation.
This is not an IOU. What you're talking about is an IOU. This is a derivative where the backing is a different currency. This is like borrowing dollars into existence using your house as the collateral. All dollars are actually created using an alternative form of collateral as the backing. In this case, instead of using your house as collateral, you can use shares in the bank as collateral. And as long as the collateral is liquid, fungible, and in excess of the value of the dollars created, you can liquidate the collateral to buy back and destroy the BitUSD created. It actually works very similar to how all dollars are created today, just in a decentralized manner.
Okay, and the other question is your system is pure proof of stake, or is it a hybrid of some sort?
It's delegated proof of stake, which means the shareholders elect 101 people to randomly selected to sign blocks with an approval voting process. So it works very similar to a company with a board of directors where they take turns signing the blocks.
Have you considered the hybrids like proof of activity? I know that's still kind of in development, but it seems to be very secure.
I'm not familiar with proof of activity, but the primary thing I'm looking for is efficiency from an economic point of view, and validity. How can you validate it? So,
Well, I encourage everyone to look at the Bitcoin talk forums. There's a lot of dialogue going on about the different proof of stake systems with some very valid criticisms of it too.
I'm familiar with the criticisms on proof of stake as well, and obviously, if we're going to realize the dream, have to stay flexible. And I am not committed to any particular proof of stake scheme. I'm committed to the best I can come up with at the time, or anyone can come up with. One thing I want to point out, we have BitUSD, but we also have BitGold, BitSilver, BitWon, and they can all trade against each other. So where else can you go to get a digital gold? Value gold, not IOU gold.
Hi, I'm Philip Bass. I'm a trader, also a blogger, write for Cointelegraph. You highlighted the proof of stake over the proof of work that Bitcoin is. You don't feel that a proof of stake coin rewards people for just holding on to their Bitcoin and not spend them?
Now you want to reward people for holding it. That's how you create demand for the coin and you grow it. You don't want to have a company that says, I want people to sell or spend or get rid of my shares. You want to do everything you can to encourage people to accumulate value in it. So spending does not drive value. In fact, all the spending of Bitcoin is resulting in selling pressure, pushing down the price of Bitcoin. You want to create an asset that people want to hold and save. And that's contrary to a lot of economics you hear from the government, but it's the foundation of savings. The weakest currency, people always get rid of what they don't want. So you'll pay with your credit card rather than your cash because cash is harder to come by. So whatever people are paying with, they pay with the least valuable currency, least valuable store of value. So with BitShares X, the shares, BTSX, that's what you want to accumulate and hold and go up in value like a company stock. BitUSD is the currency. BitUSD is spendable and tradable. And that's what people should be trading and doing business with. That's the product. That's the currency. Just like a bank, no one talks about the bank stock. They talk about your deposits, your dollars, your gold, your silver, deposited at the bank and that you transact with. Customers don't care about the price of the stock. Ultimately, if you think about it, all banks, without FDIC and all the bailouts and stuff that we have, all banks are borrowing money from their depositors, and in the event of a bank default, guess what happens? You get converted to equity. That's effectively the same thing we have going on here, only implemented on the blockchain, automatic.
Hi, Chris David from CoinFox, New Hampshire.
Okay.
You've said previously that you've charted out a trajectory of decentralized applications moving toward moving governance, moving all this stuff to the blockchain. Can you elaborate on that?
Sure. The idea of the blockchain is it's a ledger. It's a transparent ledger, and a transparent ledger that facilitates some degree of privacy. That means that we can use it for any business that's primarily a ledger. Voting is primarily a ledger. Gambling can be a ledger. Domain names is a ledger. It's property rights. Identity. We have names in our system, but you can easily put identity on there. Webs of trust. Anything that's event-based. All these things are ledgers, and they can all be on there. Every business has a ledger. Timekeeping has a ledger, and you need to be able to prove that you didn't change your hours after you worked them. All these types of systems can go on a blockchain to have higher accountability for all parties involved, eliminate fraud, prevent identity theft, have single sign-on login, eliminate man-in-the-middle from OpenSSL. All these things are possible with blockchain technology. In fact, you can post bonds on a blockchain against you're obeying the laws you agreed to follow. You can have complete governance on a voluntary basis because blockchain technology allows us to reach a peaceful form of consensus and is the alternative to governments, which are a coercive, violent form of consensus. And it's just a matter of finding the free market solution to secure life, liberty, and property. And that's what I'm going for.
You mentioned that the proof of work has the problem of consolidating power in the hands of 2-3 mining pools in the end because of the steps forward. Wouldn't the proof of stake have similar problem that eventually the power will be centralized to 2 or 3 individuals that hold the majority of the funds between them?
The free market is the ultimate form of decentralization, and competition is the key. So if one system becomes centralized, you can copy the code and launch a new one with new shareholders, new users, and it'll still function. Whereas with proof of work, if you want to launch an alternative, you got to find a whole bunch of mining power to be secure, or the big boys can come in and mess with your hash rate, perform a denial of service in your transactions. So it's about the competition and the free market as a whole. Each and every blockchain is, in fact, a mini centralized system. All the users, all the transactions, they're all centralized on one blockchain. But the free market is fully decentralized. Each person is autonomous and can make their own decisions about who they do business with, who they associate with, what they accept as payment. And so the goal for decentralization is to maximize competition. And if no one complains about Steve Jobs or Bill Gates owning large stakes in their companies, because they have large financial interest in their success. And in the event that the companies go evil, then people can move to a competitor. And that's the key thing, is all the infrastructure of Bitcoin can easily support more than one competitor. And eventually it's going to be like Visa and MasterCard and all the other credit card varieties out there. All merchants are going to accept them all, particularly if they all have BitUSD on it. Because guess what? You don't care about the value of a particular system. You're still being paid $1 worth of value. So this greatly increases competition to provide the services we want.
I'm still struggling to understand exactly what it is about that's happening behind the scenes that should give me confidence that all the BitUSD liabilities can be paid out of in full that dollar value. Can you tell us a bit more about the exchange or hedging strategies behind it?
Sure. On the blockchain, you have two parties. They disagree about which direction the dollar is going to move against BitShares X. One party thinks that the dollar is going to go down. They're the one that's bullish. They want leverage. The other thinks the dollar is going to go up. And they want to make sure that if the dollar goes up, they can maintain the purchasing power. So they both place orders on the blockchain. They get matched. You've got $2 worth of shares or coins from one user, $1 worth of coins from another. You can have $1 worth of anything. You have $1 worth of Bitcoin, $1 worth of gold, $1 worth of silver. So dollar is just a unit of measure. Now you've got $3 worth of coins held as collateral, and you have -1 USD and +1 USD. The reason you know that you're going to be able to get $1 out in the future is because the person wants to get their $3 back, and they can't access their $3 until they buy back your dollar and cover their position. They are forced to cover on a monthly basis. So if they don't manually cover at a profitable opportunity, the system will close out the position buying at the market rate. And therefore, anyone who owns BitUSD can hold out for $1, and eventually it will be accepted because it'll be the highest or lowest bid, depending on your perspective on the market. So that's how you know. If the price of the dollar starts climbing and the collateral starts becoming sufficient, it's going to buy back immediately. So anyone holding BitUSD or BitGold or BitSilver, they're in the position to hold out until they get it. And because of that, you can sell immediately to someone else who's willing to hold out for you until the market flow of capital changes. For a small premium, if you want out right now, if you want to move $1 million out, you can liquidate it today, and people will charge a small premium based on the rate. So it's not a promise to pay $1. It is set by market forces. So it is possible for it to be worth less than $1. It is possible for the entire system to fail in some kind of catastrophic hack, same as Bitcoin could fail. And if the entire system failed and fell in value by 66+% instantaneously, then you would be uncollateralized. So you are still exposed to risk to the system. But when you're in Bitcoin, you're exposed to the same risk in the system. The difference is you got price stability while you're in there, and you're getting a positive rate of return to compensate you for that risk.
Going on that, so the biggest issue is liquidity. So how many people are actually buying these options and how much BitUSD you can provide? Is that right? So if say there's $5 of people people actually betting on these options. You couldn't have a million BitUSD out there without taking a huge risk. So it's kind of a double risk that people are still risking their money in cryptocurrency in a sense, because they are putting the money in that first, then they're also putting it in these options in BitUSD. It's a double risk. Isn't that right?
On double risk, one person's assuming more risk, they're leveraging. They're exposed to more risk of the underlying cryptocurrency than the other person who has the BitUSD. The BitUSD is not exposed to the momentarily, day-to-day fluctuations in price. It's the only cryptocurrency that hasn't fallen despite the Bitcoin fall. It's held right about $1, even with relatively young and illiquid markets. The supply of BitUSD grows and contracts based upon the demand to hold it. And the only way it can come into existence if there is someone willing to short the dollar and take a leverage position, and there's someone willing to go long on the dollar. And they have to agree on a price, and the only price to agree on is about $1, because otherwise one person or the other starts out in a losing position.
I guess what I mean, the risk is, let's say I buy a bunch of BitUSD, and suddenly BitUSD's liquidity goes way down because less people on the options know their backing of it is gone lower than what I actually have. I'm exposed to that risk just by purchasing BitUSD. The liquidity has to stay where I need it to be.
There is
I'm also exposed if Bitcoin suddenly crashes, like it goes to zero, then I'm also losing out again. It's a double risk.
The liquidity on BitUSD is constant because all short positions are forced to cover on a regular basis. So they're constantly forced to give you the liquidity you need and to realize their gains or losses. They can't maintain their short position forever, which means that there is always going to be a buyer for all BitUSD within 30 days of you buying your BitUSD. Now, all BitUSD is fungible, and all short positions are constantly rotating. So on average, all BitUSD is constantly being refreshed, and you have high liquidity on chain.
So BitUSD is temporary. It's still a contract that you sign. So again, is out, then you convert back to whatever crypto or next time.
Yeah, it represents $1 worth of the underlying crypto asset.
All right, folks, well, that was an amazing presentation. We got to end it here, unfortunately. But you'll stick around and maybe answer some more questions?
Yes, I'd like to. We got a whole bunch of our people here. I'm going to bring them, they can all come down here. If you have any questions about how BitUSD works, about the main name systems, voting systems, or any other BitShares proof of stake systems, come on down. We got lots of people down here who can answer your questions.
Awesome. Great job.
Thank you.